Let's bring in Austin Goolsbee, Chicago Fed president, first on CNBC. Austin, good morning. I want to start off with the easy question. What'd you make of today's PCE numbers, the inflation numbers? Are you confident that inflation is headed back towards target? And how high is that confidence of yours?
Well, I'm liking this PCE number. It was expected, and it was even a little better than expected. I don't make too much of any one month. But I've been saying that I felt like we are on path to 2%. I have comfort. I won't say overconfidence, but I have comfort that we're on that path. That if you break out the components of inflation, we finally started seeing sustained progress on housing inflation. We got services coming back to somewhere around where they were pre-COVID. And on goods, we had a long-standing trend before COVID ever happened of actually mild deflation on goods. That's the part that's been a little overly firm in a couple of months. I think on net, that's going the right way. Now you add on top of it, we got this policy uncertainties that might affect prices. I'm fine with rates coming down, commensurate with inflation coming down. I always said, a year ago, I was saying we're entering a phase where neutral is well below where we are, hundreds of basis points. We cut 100 basis points off the rate, and now let's slow down to feel our way to what is neutral, and the uncertainty that kind of adds to that feeling.
Austin, I want to dig in a little bit more. What did you see that you said was better than expected? It looks like this super core has been pretty good. I looked at the 3 and the 6 month. They look like they're coming down. But are you still focused on the year over year at 2.8 and stalling there as what's guiding your policy thinking?
Well, no, not mine. I've been critical of, I shouldn't say critical. I'm skeptical of just looking at the 12-month number when we know that at the first quarter of last year there was a big bump up. We have been making progress. The fact that if we keep getting numbers like what we just saw, the 12-month number is going to start plunging dramatically as we go into this first quarter. That's not a sign that inflation is falling. That's just a figment of how the thing is added up for 12 months. I mean, the 3-month and the 6-month numbers have been coming in pretty solidly. And just this month, the expectation was 0.18% for the month, and it was a tad below that. Mostly it's just what was expected, and that's multiple months of solid performance coming in right around the 2% target. That's what we want.
So last time you were on, you were telling us that you think that rates a year from now will be significantly lower. I think I have that right.
Yeah, I said 12 to 18 months. I still think that.
Are you still in that zone? And is that despite, irrespective, irregardless of what happens with tariffs and fiscal policy, or is that you're just making policy based on the inflation numbers and your outlook that does or doesn't include a fiscal policy change?
Yes and no. A little of both on that. I think the predicate, the thing that is required for us to be able to get down to what I think and what still the SEP says is a neutral settling rate that is well below where we are today, is that we've got to be totally sure that inflation is on this 2% path. It's been going well. We're still making progress. We've made a whole lot of progress. The job market, to me, looks like it's settled in around full employment equilibrium. And now we've got a lot of policy uncertainty that we do have. If it affects prices, it affects us. I'm not weighing in on what fiscal policy the Congress and the president are going to choose to make. Our signal is getting a little muddied when things are happening that are driving up prices. Now, on a purely theoretical basis, if it were a one-time increase in tariffs that increased cost, but there was no retaliation and it wasn't lasting, that's supposed to, in theory, be a transitory increase in the inflation rate. And so it's not obvious that monetary policy should react to it. But the difficulty we're going to have here in this near period is if collectively policy is going to be raising prices, we're going to have to figure out which part of the inflation is the part that monetary policy should look through and which part is a sign of the economy. But as I say, separate from that, just the underlying part of the economy, to me, looks like it's on an excellent path. And this is yet another indicator that our inflation, our fight to get back to a 2% inflation, we're still making progress on that.